Hello guys, today we're going to do a video about trading psychology. The reason why trading psychology is important is because trading is a strenuous activity. When money is on the line, it's hard to remain calm and think clearly, so you need to follow some basic rules and principles when trading. The main reasons why traders fall short when trading are because of greed and fear. Those emotions are very difficult to handle. The main problems with greed are that people usually set unrealistic goals. For example, people want to become a millionaire in a week or a month. Another problem with greed is that traders usually think in specific amounts. So they feel that they need to make a specific amount of money per day and they don't stop until they make it. Sometimes they start losing, and because they want to make this specific amount, they keep on losing. The third problem with greed is that most traders don't accept that in order to make money in this market, you also have to lose some trades. No successful trader wins 100% of the time. The main mistake that people make in this regard is that when, for example, they go long in a market and the market starts falling, instead of closing their position and accepting that they were wrong, they start increasing their position's volume. That results in very high risk, and often they kill half of their account this way. Let's talk about fear. It's normal to respect the market because the market is fairly unpredictable, but you mustn't be afraid of executing your game plan. You mustn't be afraid after entering the position that the market will go against you and you do some common mistake like lowering your take profit and never let it hit. So you're constantly getting less profits than you should be. Another problem with fear is that traders are constantly second-guessing themselves. So after they enter their position, they always think that something is going to go wrong. And before you enter the position, you're always over-analyzing because you're afraid. No, you need to just stick to your game plan and execute it. The main tools you have against the emotions of greed and fear is discipline and a trading system. Many books have been written on discipline and trading systems, but in order to make it easier for you, we're going to cover some basic principles of discipline and trading systems. So let's talk about discipline first. The first rule about discipline is that you have to accept that you cannot win all the time, like we said before. Whenever you're losing, however, is only because of the market. cTrader is an NDD STP platform, and we allow no price injections, no broker manipulation, no stop loss hunting, none of this sort. The second rule is that like we said before, don't add to your losing position unless this is a part of your system. Don't just see that the market is going against you and you keep on increasing your volumes. cTrader accepts hedging, so when you see that the market is going against you, sometimes it's a better strategy to start trading on the other way instead of adding to your losing position. Third rule about discipline is that trading should not overexcite you. It's normal to feel excited about making money. It's normal it's something that motivates you to become better, but you should not feel any gold rush or any clouded thoughts or not be able to think clearly. Which brings us to the fourth rule. When you're trading, you need to think clearly, you need to remain calm, and you need to be focused. Don't do technical analysis that is overcomplicated and you have what we call analysis paralysis. Don't look at more information that you can handle. Don't trade more symbols that you can handle. Don't trade more time frames that you can handle. Stick to whatever you're sure that you can handle in a calm and focused way. The fifth rule is that you're not supposed to mess with your trading decisions after you enter your trade. Don't be constantly second-guessing yourself. Accept that the market is sometimes unpredictable and try to follow the market and follow your game plan. Let's go to cTrader now. I'm going to show you what I mean when you're supposed to stick to the rules. If I trade long here because, for example, I feel that there is some point of resistance, I'm going to set my stop loss and take profit using chart trading at technical levels below the previous low of the swing and on a take profit level that I'm comfortable that I will reach, and I will not mess with my stop loss and take profit. The next rule is that you're supposed to move on after losing a trade. If you feel that you cannot stop thinking about the trade that you lost, you need to stop trading. You need to be concentrated and clear-headed when trading, so you don't have to cover anything, just let it go and move on. The next tool at your disposal is your trading system. We already did a video about trading systems, so you can go and check that out. I'm going to show you in cTrader how can you maintain your discipline in your trading system. First feature we have in cTrader is cbots. Now you can run your robots in cTrader. What you can do, even if you're a manual trader, is program your entry and exit rules in a robot and attach them to your chart. Now when you want to enter the market, you just will press play and you will enter with your predetermined rules. Next feature that I want to show you in this regard is quick trade execution settings. You can set your quick trade execution settings for every time you enter the market for your stop loss and your take profit. And this way you're going to maintain your discipline, and after you set them up, you're not going to mess with them again. As you see, they're already preset. The final feature is advanced take profit, advanced protection. This way you can set multiple take profit levels for your positions, or you can set a trailing stop, or you can set a break-even point. So after you enter your position, you can set up whatever you want, you can click apply, and you will maintain your discipline in your trading system. A good rule about your trading system is try not to work on your trading system while you're trading. When you're trading, you're executing your strategy. You don't want to second guessing yourself or second guessing your trading system. When you stop trading and you're calm, or on the weekends, you can work on your trading systems. Try to keep a 1-to-1 risk-reward ratio, as we talked in the previous video. The final rule about trading systems is that you have to trade more. The more you trade, the less significant each trade becomes. So when you're trading, you don't feel anxious about the particular trade or what's going to happen. You remain calm and you don't really care about the specific trade. It's all the trades that matter. So this concludes our presentation about trading psychology. On the next video, we're going to talk about advanced risk management. So thanks for watching.